Okay, hello everyone and welcome to another video. This is a special video for those of you who've taken the timing program because I'm just about to do something. Well, I started doing something for private equity on a certain stock. This is actually Google. Okay, so they wanted to get some special days for 25 and 26 until the end of 2026, and I did start doing it. And then I thought to myself, maybe it might be a good idea for those of you who took the course to kind of like get your head around it again. It'd be a good case study to like do a video on it. And so let's go ahead and do it. If you're new to the channel, welcome to the channel. My name is Meydan. I'm a finance professional and also the founder of a fintech calculating market cycles, the future swing days and hours. So let's take a look. Now they're not going to use my pricing model, so they got their own pricing model. So here as well on TradingView, what I've done is basically just put on a simple supply and demand template, which I found here. Okay, as you know, I don't use that. I use my PST modeling, but in any case, it doesn't really matter. Anybody who's got their own pricing model can just use it. So what have I done? When I take a look at the radix, I saw that it wasn't very interesting. It just didn't have anything to kind of like cling onto. So then I figured, if there's nothing I can cling onto with this one, what I have to do is take an anchor and then work on it based on what's influencing it. Okay, so I did, and that was like a date way back. So once I took the date and I had to project it forward, and because we're looking at main swings, the whole number digit forecasting isn't really going to work out for us, okay? Because we have to do the main swings. So what to do? This is another reason why I want to do a video on it, because if we're kind of like stuck with an asset and we don't have much to work on, then I said to myself, I can correlate it to NASDAQ and I can work off a cycle where we have a starting point and then just project it for as many years as I want. And depending on the correlation between two, let's say, aspects or two players, according to the cycle between those two players, I can kind of like expand it as much as I want and then see if I've got anything to do with it with NASDAQ when a swing is falling on that week. Now, why can you not take a regular mundane cycle based on an anchor point and just project it forward? Not a good idea, because when you do mundanely, you'll get the problem that many people get, and that is you'll end up in midpoints. Okay, like here, it's either going to be early or it's going to be like later, and it's going to be in the middle of nowhere, and so on. This is why, remember, we're doing the same thing in technical analysis. Remember, when we're doing the trader program, we're using a few different techniques to correlate into one zone, to focus on a zone. Okay, the same thing we are going to have to use on a lot of occasions more than one approach to kind of squeeze it into a level or squeeze it into a day. Okay, when we're doing timing, obviously it's going to be tightening it up in a day, and then we'll see how things pan out. Now, because I've taken a pair and projected it forward, okay, these are the yellow lines, I also wanted to check just how good we are at doing NASDAQ. So I was just going to check that out, and I'm going to just do NASDAQ here. I'm going to change its color to something else. Let's do this silly green here. Okay, and I'm going to just go back with NASDAQ, in fact, and check out a few days. Okay. In fact, I'll do it on the Excel. Let's do it on the Excel. So let's go, first of all, let's go into what, 2024, I don't know. Let's go into, let's start with a year off. So April 2024, right? So if I squeeze this up a little bit, April 2024 is going to be there. So let me start off with those days. So what did I have there? I had, on the first week of April, Thursday, Friday with a possibility of a Wednesday. So let's just take 4th and the 5th of April. 4th of April. That's your 4th of April. Okay. I'm just going to expand that. Now remember, the Excel for NASDAQ is intra-week swing days, right? So those are the swing days we want to be taking into action. So that's the 4th market falling down. And if I did take a Wednesday, that would be the high, right? So that's your Wednesday. But let's say I just took 4th and 5th, okay, for the sake of argument. That's your 4th market coming down, and that's your 5th market going up, okay? So let me just make this a little thinner. It looks like it's too thick. All right, so there we go. So 4th and the 5th, nice and easy, okay? So now, if I was to go back, I've got the 4th and the 5th of April 2024. If I go back now to taking that pair and check if there's anything in April 2024, April 2024, on the 5th or the 6th. What do I have there? I've got 750, no. On the 3rd, 756, 757, 760 on the 8th. Okay, 760 on the 8th, which is not helping us, but let's check it out if that's worth it. 760. Nope. Nope. No, it's not happening. So 760 is not good at all. So we don't have anything there when I'm checking the pair, but we've got it with the NASDAQ. So if I had anything there to do with the pair that I took for the cycle, okay, then that would have been okay. Let's see if this low was relevant for us. That's the 5th of March. March. On March, we had the 6th of March, okay? And that was an 816, so the 6th of March was that one there, all right? So the market made a low and just kept pushing up into March 11 and 13. Where's 11 and 13? That's on the intraday, okay? So that would have been 13th of March. They're going all the way into next week. That's right, okay? But for us, let's see on the double cycle, the 6th of March is relevant, is it? Let's go to the 6th of March. Because we're looking at major swings. 6th of March, 735. It's a 735. Nope. On a 30, nope. On a 60, no, it's not going to happen. That's not happening either. So that's not on a major cycle on those two either. So what I have to check on that is 816, 267, 267, 270 on an 11th of March. is there. Okay, so which means we have to correlate everything with that week's NASDAQ. All right, so if you've got a radix you can't work off of, then what you have to do is just take NASDAQ, anchor it, and then take the asset, in this case Google, anchor it, okay, and then correlate them together. If they match, it should be a major significant swing day. If they don't, it won't be. So if I go into, let's get rid of these, right? Let's delete these. And do one. Now the yellow ones is going to be the NASDAQ. So I'm going to just change the color on this one. So that's going to be NASDAQ. Okay. And then I'm going to check how that's going to pan out with the major cycle of a pair. All right. So let's check it out. If I go into, just bear with me. Okay, so let me just bring this up here. So that's going to be in April. So we're now in 2025. If I come to 2025, April, March, April. So now I'm going to have to take something around the 30th of April. Okay, because we're already on the 21st. And let's see what I've got here. 900 on the 27th. If I take a 900, that's definitely going to do it for sure. Yeah, so that's gonna fall on the 27th of April. So if I was to move this blue one here into the 27th, now 27th is Sunday, so Monday 28. So Monday 28, we're gonna have to mark it in. So Monday 28 is in there. All right, 28 to the 30th. So if I do NASDAQ, on the NASDAQ, April 2025, we've got the 30th, which is there. Okay, and then we've got the Sunday, which is going to turn into a Monday for us on the pair cycle, which is going to be there. So we're going to look for those 2 days when we're checking out a swing which should match, well, which we want to match a price. So if we come down, if there's a short position, and if we come down into a zone, then this zone is going to be a buy zone. So any sell opportunity or any sell position going down should be closed. Okay, and then looking for a push up. Now if they're going to hold it for a long term, then how are we going to do it? Then you're going to have to turn this into a weekly, won't you? Okay, and then you're going to have to wait for the main swings coming in into this zone and then moving. All right, that 97.26, as you can see, I had before, because I do think the market, if it's going to come down a little bit more, not a bad idea. This 97 zone, 96, 97, can be again a place of interest. Okay, we'll see how things go. It's obviously bearish, right? Or if we go up into a zone, then selling it is also going to be okay at those swing days from a sell zone, right? So if we were to go up into these days, we'd be sellers. To come down, we'd be buyers. And those should hang in there for a while. If I was to check all of 2025, let's get rid of that. Let's see 2025. If I was to take as at January, Monday was January 6th. If I was to go back into January and first look at the pair cycle, okay, remember first we're looking at the pair cycle and then we're correlating it to the NASDAQ cycle. Why? Because NASDAQ's got a cycle of 5, okay? So we've got the first 5, that's one cycle where we can match the digits, and then we've got a pair which we anchored to a price, okay? And from there we've got those two working. So if I was to take a look at January, I've got 900 on, oh, there's a, that's not gonna, yeah, that's not bad. So on the 2nd of January, okay, so obviously that's right after New Year's here. That is, yeah, 2nd of January is a Thursday, right there, okay? And that's going up for a few days, coming back, not going any lower, and continuing to go up. Now, if I come to 2nd of Jan, okay, the week of 2nd of Jan, we have a Friday, okay, which is the 3rd of Jan. So if you take a look at your 3rd of Jan, then you got something to talk about, because Friday is becoming a swing day based on the cycle eventuating on a Saturday. All right, because the real date is a Saturday, but we can't take a Saturday because it's not a trading day. So that's how it pans out. All right, so then that's your Thursday, Friday market going up into the next week. And then on the next week, we don't have anything because it's not going to be a major pair cycle. It's going to have to go into 870 or 885 on the double pair cycle. And that 885 is going to happen, if we follow it all the way into there, on the 13th of February. So on the 13th of February, we've got, 13th of February, right there, market coming into a low. On that week of 13th of February, what do we have? We've got a 12, we've got a 14. That's going to be your 12, and then that's going to be your 14. And then the market, as you can see, turning around. Okay, so that is okay. Now we're turning around. The market does not make a higher high than that, which is the NASDAQ cycle, and the main cycle of Google is on the day before. All right, so now that's all correlated. Market's not making a higher high, and then it's rolling down. When is that falling off? It's on the 21st of February, which is a Friday. And that's the 14th, which is fine. Okay. And then we've got the Friday 19 we've got, which is there. That's also the following week's NASDAQ, but it is not a major cycle of the pair I took from an anchored price. See what I mean? When they come together, then you're going to have a few things coming together. That's going to give you, okay, the sign. Okay, so market coming down, slight retracement, tumbling down, going up, tumbling down. If I come to another one, let's say I pulled it from an 885 into $70, that's going to be, with all the back and forths that's happening, it's not even going to 870. It's going back into 900. When's that going to happen? No, it's not even going into 900. It's going to go back into, oh yeah, it is 24th of April, 27th of April, which is right there. Okay, so that's fine. So from that cycle, it's going all the way into there. All right, and that's how it is. So this is going to be relevant for us, and NASDAQ is going to have its day in April on the 30th. Let me just check the major ones to see if anything's going to happen there. Nope, because it's a Friday, and after the Friday of the 25th, we're going to have the 30th. So that main cycle is going to be between that Monday and Wednesday. So Google is going to have that zone. All right, so the same kind of mentality for this one. When you're anchoring, you're taking 2, and then you're taking NASDAQ. And this is, when are we going to do that? We're only going to be correlating more than one thing when the radix isn't looking too good. All right, if there's nothing to work off of. And with Google, I couldn't find anything decent to work off of. Okay, obviously, there's a value to the company. It's a good company. So there must be something that we can find. And if you anchor it, you can find it, and it works out fine. All right, and then you can correlate it with NASDAQ. And then you can correlate Google, NASDAQ, Google coming together, bang, 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 turns. Now all I have to do, once I find the major pair cycles, then I can go to the NASDAQ cycles for that week and check it out. And then it's just going to be like exactly like this. And if you've got any kind of technical analysis method you're using, that's just going to be fine, because you can use a breakout here. The market can break out. You can sell, okay? And then, why? Because there's a break of structure here, right? You see how the market structure broke, comes back into the goodbye kiss on a swing day. All right, you guys know about the goodbye kiss. So it just makes sense, okay, if you think about it. All right, once you find your dates, then all you have to do is match your goodbye kiss, swing day, off we go. All right, I hope that helps. If you got any questions though, you guys know how to get in touch with me anyway. So you can basically just ask. Okay, but this, you should understand, the system is quite helpful, and it's like easier to work off of. If you got your technical analysis, you got your modeling, working off the swing day from a pair, of a radix, of a fixed point, and then matching it, marking it on a NASDAQ, matching it to a NASDAQ, it's fine. If it's correlated to anything else, like an asset or any other thing, you can also match those days as well. Also, what might be a good idea, what you can take, is remember when we're taking a time to time period and a price to time period, and then see if they correlate as well. When you have more than one thing coming together, and they're like plus or minus 24 hours, because we're going around the globe, right? 24 hours, then you got yourself a swing day. And if you match it to your price and the time intraday swing hours of the day, it should all be honky-dory. The rest is just you waiting it for the next day. So having that done on Google, marking this zone in, then this zone coming all the way into this zone makes sense. If you take into account the pair cycles, it makes sense. All right, and then you mark it in with the NASDAQ, like I said, and then you've got yourself a sweet spot right here. Okay, in any case, if you got any dramas, you can always reach out and we'll clean it up. Okay, we'll clear it up, clean it up, but it's nice and easy. So you can see also the future days. I've done it in such a way we've got a day in every month where we can get a swing day. Then all I have to do is check out the NASDAQ swing days for that week and then match them up and see if it comes into a price zone which you want to trade. If it's up there, you can sell. If it's down there, you can buy. And then the beautiful thing is it's going to be a micro level and a macro level cycle match, which should make it a decent turnaround. Just like here, if it's all matching in, you understand this is the NASDAQ. Okay, so let's make this yellow. So that's the NASDAQ, all right? That's the Google, okay? So market coming in, sizzling out, and then turning. So it's a major cycle meeting a minor cycle at a micro level, and then it's that same kind of thing should happen when these guys come together here in this week, and so on and so on. All right. Okay, have a good day.